So if you're thinking about buying a home and you're not sure what you should be doing as well as what you shouldn't be doing, check out episode 50 of Tom's Take now to learn the 3 do's and the 3 don'ts of applying for a mortgage. Hi, I'm Tom Toole. This is episode 50 of Tom's Take. Big number. We're halfway to triple digits. And this week, we're going to go over what to do when you're applying for a loan and what not to do, which is equally important. A lot of consumers don't really understand these things, and their lender may not be sharing it with them. Their agent may not be sharing it with them. So we're here to share with you and educate you, if you're thinking about buying a home, of things you should and shouldn't be doing. So let's go over the positives. I'm a positive guy. The 3 do's. So the first is to stay current with all your debts. Don't fall behind on payments. Don't get into a 30-day late situation, because that will negatively affect your credit, and a negative effect on your credit could affect your ability to qualify. And this can happen even after you go under contract and get pre-approved, because there's still that 30 to 60 to sometimes 90-day window between signing a contract and going to closing. So keep paying your bills as number one. Secondly, make sure you file your taxes. I cannot believe how many times we've run into people where they're ready to buy a home, the approval sounds good, and their numbers meet the requirements, and when it comes time to get all the documentation, they don't have their taxes filed. Luckily, we've got a couple great accountants that we work with that can get taxes filed in 2-3 days sometimes. That being said, typically you're going to need at least 2 years of tax returns. So make sure those are all filed, that you have a copy of the return, and you can provide it to your lender. And lastly, keep your lender informed. This is the third thing, and this can vary in a lot of different ways. One would be if you're using gift money. That's a big difference between getting a gift from a relative versus using your own funds. They have to source all the deposits, show where the money's coming from. So it's really important that your lender's aware of that. Also, keep them alerted if you're needing to change your income, or there's some sort of change in your financial status. So anything that goes on, the lender needs to know, because this can affect your ability to get approval. A lot of people think you get pre-approved and the mortgage is good to go, and that is not the case. Final approval typically happens a few days before settlement. That's when the wire gets sent with all the funds. That's when the mortgage documents are prepped and sent to the title company. So please make sure you're keeping your lender informed in any change of financial status. Also, as kind of a follow-up to that, the agreement of sale in Pennsylvania, it requires that you inform the seller of any change in your financial status. So please keep your lender informed of anything going on in your world. Here's the 3 things you don't want to do. One is apply for new credit. So go out and buy a brand new car and get a car loan. Get a new credit card. That can affect your score in a lot of different ways. So don't apply or go buy something big while you're under contract to buy a home. Again, just because you're pre-approved doesn't mean you're going to get final approval. Loans do get declined. It does happen, and that's why it's called a pre-approval and not an actual final approval. Secondly, don't close any existing accounts. So maybe you have a credit card you're not using. Maybe you have some sort of other account that you want to charge off or settle. Don't do any of that while you're under contract for buying a home. Again, these things are going to change how your credit score works. It could also change your debt to income ratio. It can change your usage of available credit, which affects the approval process. So this is where you really need a good lender to make sure that they're guiding you through this process. So don't close any accounts that were open when you got your pre-approval. And lastly, changing jobs. Now, changing jobs happens. That's not the point. What you don't want to do is change jobs and not tell anybody, or quit your job. I've seen that happen before. You can't make this stuff up. I mean, I'm smiling because it's crazy, and that's why it's important that people are aware of these 3 things you do want to do and the 3 things you don't want to do. Changing jobs or quitting your job, that eliminates income. It can change your income, which throws off your qualifying ratios in terms of allowable debt to current monthly income. So all these things have an effect on the approval process. So we just threw a lot at you. If you have a situation that's a little funky or you need to talk to someone about, reach out to us, contact us directly, ping us on social. We can put you in touch with a great lender, or we can answer it ourselves. Obviously, if you want to see any other things like this covered in future episodes, let us know. We'd love to get some feedback from you, and we'll catch you next week. Thanks for watching Tom's Take.